Welcome to Tech Confidential's Behind the Money. I'm Mary Kathleen Flynn. I'm here talking with Claudia Munce, who is the Managing Director of IBM's Venture Capital Group. Claudia, thanks for joining us.
You're welcome.
IBM has an interesting way of working with startups that is not like a traditional approach of somebody like Intel Capital. Can you just outline how you work with startups and how it's different?
Absolutely. Our unique model is we look at them as a strategic technology partner that can provide these very innovative or truly pushing the envelope of existing market solutions that can be incorporated and integrated into these much larger solution stacks that we deliver to our customers. So we're not really looking at the financial, the exit, the IPO, the M&A aspect when we look at a company. We look at them as a real solution providers to the customer base that we have.
Claudia, can you name some of the specific startups that IBM is supporting in cleantech?
Oh, absolutely. One of the startups that we're very excited about is named SynapSense. And what it is really a sensor. And as you know, in order for us to manage the data, we need to know what is going on. And a lot of innovative sensor-based companies that allow better metering of both the usage and the production aspect is very, very valuable to better manage the resources. So SynapSense has a sensor that really monitor the data center activities that allow us to gather the data when the distribution is being maximized and when the load is maximum versus the normal patterns. And that allows us to really gather that data through a very quick processing and provide the best solution at the real time. So is something that I think more and more so we're going to see sensor-based technology solutions both at the consumer end and at the production sites.
So maybe you could walk us through how you might work with a startup like SynapSense. How did the relationship begin? What kind of financial investment does IBM make, et cetera?
Absolutely. The financial investment that we made, let me just start from that, is very much what we call the in-kind investment. So we start from identifying what we consider the best of the breed technology company, and most often, through the dialogues that we have with our key venture capital partners, there are several very, very reputable firms that are focusing on the clean tech investment today. The clean tech investment is rising globally. People are seeing that technology, not just in terms of the financial benefit of investing, but the overall environmental, the energy efficiencies that all of us care about. So as the investment rises, it's clearly setting some thought leaders in that community that are leading a lot of these deals on the global level. So we work with these leaders and we learn about the company and the reason behind those investments. And when that has a synergy to what we are seeing from our customer need, the customers are asking us to better improve their cost structure in energy distribution. The customers are asking us to improve their carbon footprint. And those type of customer requirements synthesized with the technology is how we identify these companies. And once we do, the in-kind investment kicks in, which means we really bring the technology, we try to validate them, we put them to the fire test, we put architect, technologists, business channel partners, business development resources to really make that technology a robust solution that can be integrated and piloted with a customer base. And of course, at the pilot phase is something that you continue to improve and fine-tune. Before the technology is widely deployed, there's almost always one or two pilots that are in the marketplace with real customers, but in a more protected and isolated environment that we actually bring in to the portfolio company and help them really robust their energy solution to deliver in the marketplace.
But in terms of a transactional deal, then, it's the venture capitalist partner that you work with that makes the investment in terms of dollars.
Dollar, yes.
Okay.
Equity, completely lead. As a matter of fact, it's something that our venture partner actually appreciates that. Their business is in the investment business. They are looking for that IRR from their investment. Our business is to generate revenue through the customer needs that we can identify. So in many ways, a very synergetic partnership, because our stockholder does not reward us so much for investing, because that's really not our core business. Whereas their limited partner are asking them to generate the financial returns. So it's a very synergetic partnership that has worked very well.
And who are some of the venture capitalist firms that you work with in the clean tech space?
You know, we certainly work with a technology venture. Technology venture is one of the key firms that has invested in several companies that we work with. But the Kleiner Perkins, the CMEAs, the American River Technology, which is primarily focused on clean tech. There are several of these firms that focus more not on the production of the energy, but on the distribution, the analytical, the information aspect of the clean tech. And those are the firms that we work closely with.
All right, thank you very much, Claudia Munce from IBM. I'm Mary Kathleen Flynn with Tech Confidential's Behind the Money. Thanks for watching.